What is going on, guys? We are back with another weekly episode of our trade breakdown series. In this week's episode, I'm going to be walking you through step by step on how exactly I generated over a 400% return on meta puts this past Friday using my go-to #1 short strategy. Before we get started, if you enjoy these videos, please don't forget to like and subscribe and make sure to turn on notifications so you get notified every time we drop a new episode. With that being said, let's get into it right now. All right, guys, now as per usual, the way that we like to start these videos is going over my confirmation points for the trade at hand. Now, it's important to note this trade was taken last Friday, and as trades on Friday, guys, these options were expiring 0 DTE. Therefore, we only had a few hours before these options expired, and I was approaching this trade with smaller size. So I wanted to preface by starting with that. That is definitely a really important thing to understand. 0-day expiration options are very, very high risk. I only trade them usually 1 or 2 times per week on Fridays. And in this case on Meta, I saw a golden opportunity for me personally on a 15-minute short trap at pre-market high. Now, before we get into that exact setup, I want to focus on the key daily level from the Meta daily chart, guys, that I was using in order to choose my strike price for this trade. So if we're looking at the daily chart here on Meta, guys, you can see that at the bottom of this earnings peg, so a peg is a power earnings gap, we had the candle low here at the 180.16 spot, right? If we look at that candle and you highlight that candle on the Meta daily chart, we know that is going to be a very key level. We saw that once we broke down past that 180 spot, it's created really nice short side moves in the past, but it's also been a very key area of support. So in that case, guys, as we can see on the prior day as well, we had a low at the 180.30 level. And so in this trade, I chose the $180 put strike because I was targeting a move to this spot at the 180 area. I also knew that if we got a move below 180, this could end up being a really nice trade to the downside, as this level has acted as a key pivot for short side moves in the past. So as we go to the 15-minute chart, guys, like I said, I took this trade on a bearish 15-minute candle trap at the pre-market high. So if we look at the pre-market high here on Meta, guys, on the 15-minute, we can see that we had a pre-market high at that 182.76 spot. So as we go into this, we are looking at the Meta 15-minute, and you can see on this 15-minute candle right here at 12:45 Eastern Standard Time, we had a bearish wick printed above that pre-market high, and then the candle body pushed back down and ended up closing below. That is a trap to the long side. So we see traders come in, they're looking for a break above pre-market high, buyers step in, and then the candle ends up closing below, which creates trapped longs above and can really accelerate short side trades. That is why this strategy is one of my favorites. And as you can see, guys, I entered this trade on the Meta 180 puts at about $30 per contract on the start of the next 15-minute candle here at 1 o'clock. I entered the trade at 12:59. And as we can see, guys, we really saw the selling pressure accelerate off of that pre-market high level. You can see that that very next 15-minute candle actually flushed directly down into the first target zone. So like I said, guys, I was first going to be targeting a move to the 181 area, which had been an area of prior support in that day, right? So we know that that 181 area, we had seen multiple bounces off that spot. I knew that was going to be my first target in this trade, and then the ultimate target here was to get these in the money at the 180 spot, and I knew that we had a prior day low, right? So our low that morning was the 179.73 area. Meta perfectly flushed down to my first target area at the 180.20 spot and that 181.11 area. I took about half my position off at this spot for about $57 per contract. That was a fantastic move from my entry spot at that 182.76 area. And then I actually held about half of my position, guys, for a break below this 181.22 area. Again, I had already scaled out half my position. The position was basically free at this point, meaning I had taken my initial costs out of the trade, and we got a beautiful move down as the S&P 500 continued to flush. We got a beautiful move down below that 181.22 area. Now you can see when we broke below that 181 area in the past, that earlier in the morning, we flushed all the way down to that 180 zone, right? And that is exactly the move we got, guys. One 15-minute candle flushed Meta all the way down into the 179 area. This is where I scaled out about 70% of my position once we hit my target of that key daily level at 180.13. I scaled out about 70% of my position here, guys, and then I was able to actually scale out the rest of my position on this move down that we saw below the 180 spot down into the 178 spot. This created a 400% return on those contracts, guys, and put these meta contracts deep in the money. I scaled about 80 and 90% of my position at over $130 per contract, guys, resulting in a just over 400% return in about 45 minutes on this trade. This is, again, a very, to me, simple and easy to understand and use and implement setup on a daily basis. This is one of my favorite types of trades to take on the short side. And like I said, guys, in the current tape that we are seeing, things are heavy. Things are really accelerating to the downside, especially as we get those moves down on the S&P. And this is one of my favorite strategies to implement. All right, guys, I hope you enjoyed this simple and easy to understand breakdown on my trade on Meta. This is a setup that I use on a day-to-day basis, especially when taking advantage of these trades to the short side. If you guys enjoy these videos, please don't forget to like, comment,